How to solve mortgage over basis using a 1031 exchange and a deferred sales trust. That is the subject of today's video. Hi, I'm Brett Swarts, founder of Capital Gains Tax Solutions, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, to solve mortgage over basis challenges and to exit highly appreciated assets, all tax deferred, so you can create and preserve more wealth. Is an amazing way for you to create and preserve more wealth and help your clients, friends, and family do the same. So in today's video, we're going to talk about a case study. We're going to talk about how to use the deferred sales trust to solve mortgage over basis and action steps that you can take to make sure that you are properly prepared and working with qualified intermediaries who can help you execute this. Okay, so let's define the problem. So for any debt over basis that you have right now, and any asset is not tax deferrable using a deferred sales trust. However, if you work with a qualified intermediary and you are selling, let's say, a piece of real estate that's an investment real estate, you can do a partial Delaware statutory trust, not to be confused with the deferred sales trust. Both have DSTs to solve this challenge. Okay, so let's talk about that. We have a deal that just closed. It was in Colorado, and this particular client was selling about a $4 million piece of real estate, a multifamily property. His basis was essentially zero, and his debt was about 1 million. So he had about $1 million debt over basis, right? His basis, adjusted basis, was zero, debt was 1 million, selling for 4 million, right? And so that debt over basis is not tax deferrable using the deferred sales trust. However, since he has an investment real estate sale, and since he was able to work with a qualified intermediary that is approved by Capital Gains Tax Solutions, we were able to send all of the funds at closing to the qualified intermediary and then purchase what's called a partial Delaware statutory trust interest. These deals are great for the ones that are highly leveraged, because the debt is not in the client's name and the tenant is a very strong tenant. Tenants like Ford Motor Company or Amazon, big companies, typically big warehouses, industrial type properties that are secured and or backed by the company itself. And so very strong asset type, very strong tenant, great operator, but all we wanted to do is replace that $1 million debt over basis. And so the LTV for, I think it was right around 88%. So it took about an 18% down payment. So 18% of $1 million would be about 180,000. And so he and his wife decided to put $180,000 of investment out of about 3 million of equity that's at the exchange accommodator. And that was able to replace that debt of $1 million that was above his basis. And this does some amazing things because now he is in a deferral state, and Amazon or Ford Motor Company, they are paying down the debt on what's called a zero coupon deal. For those that know what that is, that basically means it's zero cash flow to the investor, especially at first. And the way they've structured with the banks is they said, okay, bank, we'll buy this deal, we'll get this amazing tenant, but we want you to give us a high LTV because we have these owners that specifically need the debt replacement and they don't want to incur huge tax. And so allow us to put as low amount of down payment as possible to get as much debt as possible. And the bank says, sure, we'll do that, but that means all of the cash flow you need to pay us down. And so these loans are structured where the bank also feels secure because they know all of the cash flow is going back to paying the debt down. Whereas most deals, might be interest only payments, or it might be delayed payments, right? It could be a couple of things. That's why the banks are saying yes to this. This is why it's perfect for our client. So now we've replaced that debt requirement, right? So that's huge. You might be asking, well, what if I don't have a 1031 option, right? I'm selling a primary home or a business or cryptocurrency or a stock or something else. Well, then your option is to pay down the debt to the basis, right? Because you don't have that 1031 option. So that's part of the challenge with the 1031 exchange. It only works for investment real estate. So take money from somewhere else and or move the debt off of that asset somehow. So at the close of the asset, you don't have that debt over basis, okay? So back to the deal. So the rest of it was sitting at the qualified intermediary. Remember, we put $180,000 to the debt over basis deal, zero coupon Delaware deal. The rest of it, 3 million minus the 180, was able to go into the deferred sales trust. Now he is really excited about this because A, he thinks real estate values are really high. B, the stock market is in an adjustment period. And C, he wants to be entrepreneurial, but just not right now. And so the money sat at the bank for a period of time, and then he's slowly dollar cost averaging into some stocks, bonds, mutual funds, into some real estate. But he's passive now on this amount, which is really great, at least for the time period right now. Now he's thinking about doing a development deal here in about a year, year and a half. He's buying the land. He's going to demolish a duplex, and then he's going to use the trust to partner with him to build that. So it basically gives him, I call it the Swiss Army knife of tax deferral. It gives him what he wants. He can be entrepreneurial. He can be passive. He can be active. He can diversify. He can retire if he wants to, and that's the beauty of the deferred sales trust. If you want to get started, you can head over to capitalgainstaxsolutions.com, and we are happy to help you with all of your needs. By the way, we are commercial real estate brokers. We're investors. We work with some of the best in the country to help all of our clients execute this, and or we're constantly bringing new team members on in strategic alliances so they can execute this. But the first thing is really defining the problem. Do you have a mortgage over basis? Number two, do you have an investment piece of property? Number three, what is the solution for that? What's available? What are the tools? And if you don't have an investment property, then obviously you're more restricted to just paying down the debt or moving the debt. But go to capitalgainstaxsolutions.com. That's a lot to take in a video, but we want to work with you, talk with you. Who does the Deferred Sales Trust work for? Where anyone that has at least $1 million net proceeds, $1 million gain on really just about any type of asset, business, real estate, NFT, crypto. It can be a GP or LP interest. We just had a $48 million deal in Vegas for an apartment owner, 2 apartment owners and a bunch of LPs. And 3 of the partners end up doing the Deferred Sales Trust. So it's very flexible. The whole entity doesn't have to move. But you want to know what this is and how it works before you make such big moves. And this is why we're here for you. Go to capitalgainstaxsolutions.com. So also check out the book that's coming out, Building a Tax Deferred Exit Strategy. We have people like Kevin Harrington from Shark Tank in the book. And this is an amazing way to hear the story of the Deferred Sales Trust and to start to get some introductions to ways to create wealth in a tax deferred manner. I so appreciate everyone out there. If you're listening to this on the podcast or the YouTube channel, thank you so much for watching. Please rate, review, subscribe. Please share this with someone it can be encouraging to and help out. And remember, you're only one deferred sales trust away, and we're here to help you if and when you go to exit your highly appreciated